Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, April 20th, 2020. We'll start out here with the broad markets. Just take a quick look at the equity indexes. I put out charts today. Not a whole lot has changed since this morning, so we will go through those quick. And then I think I'll cover. Somebody asked about oil on the homepage. Typically, try to keep the homepage comments on task or on topic, meaning anything in that post above. But things are slow today. I'm just kind of watching the markets, seeing which way the equity markets go here. So I don't mind. I'll give you my thoughts on oil for whatever it's worth. And let's talk about what we need to watch for this week that could move the markets. All right, and that's tech. We're going to talk about IBM, and we have a couple actually coming out this week that could move the markets. We have Netflix as well, but as far as tech, it's IBM tonight, and then Intel on Thursday after the close. So we'll take a look at those charts. As far as the S&P 500. Really nothing big to report. Down 1.76, but that's nothing to get up and click your heels if you're short. We're still kind of slowing down here, and that's what these the whole thing about these divergences, these indicators I use, these are momentum indicators, and that's what they're telling us. As you can see, the momentum is slowing. In other words, you had we were moving up pretty rapidly before, and then suddenly, lately we've been kind of slowing that down. Now maybe this is consolidation with another leg up. Sometimes you do that, you slow down, you consolidate, and then you continue down. But that's, again, these are momentum indicators, and although not perfect, I'm going to get to that in a second with crude oil. Once you get these divergences, especially when they're confirmed along with other indicators, they give you a pretty good heads up of an impending trend change, and that's what we're looking at. So that's what these are, momentum indicators, and when they start to diverge with price going up while the indicators are making lower highs and the prices are making higher highs, that's your divergence. And so it's there in place, and until unless it's taken out, then it's telling me that we'll probably head lower. However, as I always say, divergences, and this is super important, divergences, just like overbought and oversold readings, are not buy and sell signals. They're merely an indication that, hey, we may get a trend change. Then what you need are sell signals. Now, we did have one not too long ago. We had a breakdown here on this little minor uptrend line on SPY. But what we did there is we've gone mostly sideways. We went up, and we did have divergence at that before that breakdown right there at the highs. There's your divergence line right here. If I could draw it with a line tool. Right there. And what happened, we went up, the divergence extended, we made another marginal new but still divergent high, and same thing until recently. So this is no different from what I finished the week on Friday. This is a minor trend line right here on SPY, is the closest thing that I can see to a sell signal, and that's still pending. We pretty much moved down. Remember, we temporarily suspended the stop on Friday to be reinstated today as it was, so we're still in this trade, hanging in there. Really, a little bit below the entry price right here of 273. We're 281. Less than, you're talking 8 points on a 200, almost $300 security. So we'll call that flat. At least in my book, that's a flat trade so far. Not much more to say about that. And QQQ, now we had a sell signal, but as I said this morning, not a very impulsive one. What you want to see when you have any type of a bullish or bearish chart pattern, you want to see an impulsive move. For example, we had a similar wedge right here, a little small 60-minute wedge, clean, well-defined trend line right there working, and gap down. That's impulsive, and that was our sell signal. And from there, we corrected. We moved lower. Right here, this is what we were tracking back a couple months ago before the market bottomed. For about a week or so, we were tracking the big divergences, big bullish divergences on the market, SPY, QQQ, and then we had a breakout right here, a gap up. That was impulsive. Impulsive move could either come on a solid rally up through that level during the day or a gap. When you have a gap, which is what you have right there, you don't see a candle because gapped up. So nothing's more impulsive than a gap, because what that does is it traps shorts. Those that were still short at this point in the market get trapped, and then they start to get squeezed out. And then longs that might want to buy at the optimal time, they don't want to chase because it gapped up too much that day, whatever it was, big old gap, 5%. So I'm not going to buy a 5% up day. I'm going to wait for a pullback, and that pullback never came for them. So now what I'm talking about now is we had a breakdown the other day on Friday, but very unimpulsive, if that's a word, non-impulsive. You move through there. You can, like I said, you can play around with this trend line a little bit. It doesn't matter. You can't see anywhere where the sellers stepped in aggressively, and that's because SPY's held up. And what we've done since now is we've set up probably as significant as that trend line was back then. Again, we were lacking an impulsive move down, impulsive follow through selling, big red candle, high volume, all that good stuff. But so we just moved sideways. But the breakdown is intact, and now we have a pretty decent resistance. I'm sorry, support level about 212.30 right there. You can see that that was resistance right here on the 14th. We popped it, gave it back up. Basically, once we recovered it, it's most importantly, it's where we've been dancing now for the last couple days. So this is where we close the day. We have IBM tonight. I'm going to get to that one in a second, share my thoughts. And then that may or may not move the tech sector. When I talk about these potential market movers, you know, you have the FANGs will soon be reporting, Facebook, Amazon, Alphabet, Microsoft, Netflix, I think it's tomorrow night. You know, these guys have the potential, any one of them. And more so is my common theme for the last week or so here has been that there's what I believe to be a dangerous disconnect between fundamentals and what the tech stocks are doing. Now, if you look at it really from this perspective, and what I'm talking about is people have that, as I said, you know, I can make the case for it. I made the case for it before, early on in the correction, that tech stocks are not as vulnerable to the what's going on with coronavirus because most of those don't have retail storefronts like restaurants, airlines, you know, shopping malls, things like that. However, they are, and please do not mistake this, they are very vulnerable to the economic cycle. So if you're a believer that even if coronavirus goes away tomorrow, if we continue to see an abatement of new cases, if you believe the economy is going to run right back to where it was, and meaning at full 100%, the same capacity it was running at before this whole thing started back in February, early February or so, then sure, tech should go up more, go on to new highs, just like the economy and everything else. But then again, so should the banking sector, so should crude oil, which it's not, and other things. So other things are telling me that that's you know, probably not going to be the case, and that there's going to be a pretty rude reckoning when you know, hedge fund managers, especially those that are wet behind the ears, you know, younger ones, come and realize that, oh, well, shoot, I was buying tech stocks all along because I thought that's a safe place to be right now, but realize they're going to you know, either have an unexpected large drop in earnings last quarter, but more importantly, it's what's going forward. Remember, the last quarter, here we are, today is April 20th. IBM, for example, is going to report, and it's going to report for the quarter ending. Let me see if I can get that. I couldn't find it at a quick glance, but they're going to report first quarter earnings. And my point is, that stuff's dated. You know, by the time it comes out, it takes a while for the accounting firms to go through and you know certify, and all the bean counters to do that. So those numbers can be up to 4 months old. You know, if the quarter ended a month ago, then you have you know, some of those sales and everything that occurred going back you know, to the beginning of the quarter. And so it's more about what's going to happen going forward. And again, I've already shared enough of that to my thoughts fundamentally. So let's just go back to the technicals here. So there's QQQ, unimpulsive breakdown, but it is kind of dancing on this 212.32. I'm going to call that minor support. But again, we already had a breakdown, and we're below the breakdown point. So the potential's there. And depending on what happens, here we go. That's one of those after-hours spikes. We have after-hours trading now, and we just saw that big red candle down. For some reason, and it's not only this charting platform, a lot will do that. I think it is somebody has a limit order there or something in after hours and must get filled, but this is still where we're trading right now in after hours session. So let's get to Intel. Let's look at SPY real quick. Or no, let's look at the futures and we'll get to Intel and IBM. Okay, similar to QQQ, the most important levels that I'm watching right now are the uptrend line. That's why it's a little thicker right here. Here's your uptrend line, forms this, you have a divergent high right here. See the negative divergence. Divergence has been building really since this point, but really started to steepen right here. So if you take this, and this, you have a, you know, a wedge type pattern, most importantly, a breakdown, just like QQQ. I mean, this should be a near mirror image, other than the fact that NQ trades virtually around the clock, except on the weekends. Opens, closes on Friday night, opens back up on Sunday evening. But that's it. This little kind of pinched in range, and you can see it was resistance here as well. So for your NQ traders, right here, that's the level to watch, 86.90. And again, ideally you want to see some impulsive selling to help support the short case. Otherwise, this breakdown, may not really do anything. We could chop around here. It's earnings week, so the one thing I can give you is expect volatility to kind of pick back up a little bit now that we have a lot of big companies coming out and reporting this week and going forward from here. We're just getting started, really. Now that the financials, they kind of kicked it off, but it's tech. To me, it's tech. And why is it all about tech to me? It's very simple. I updated my numbers today, straight off the SPY's website, and these weightings have increased. 25.44%, or 1/4 of the entire returns from the S&P 500 are attributed or weighted towards one sector, the top sector, technology. There's a lot of buzz about the banks getting beat up through all this, and getting bailed out again by the government as they did in 2008. But guess what? That's not even half of the impact on the S&P 500. XLF carries, as of the most recent numbers, a 10.59% weighting. So in other words, XLF can go up 20%, and that's not even going to move the needle on the S&P 500 as much as a 10 or even 8% move in the QQ or the tech sector would. So that's what I'm watching, and very carefully, and I think others will be soon. And I think they're going to realize that tech is not immune to the biggest turn, the biggest drop, plunge in economic activity, maybe in history. I think that's what the market will soon come to recognize. So now here's a problem: the market can stay irrational longer than you and I can stay solvent. That's the old saying. So we're at about the threshold of some of the stops on some of the trades. And let me go back to XLK and just show you a couple things to note here. As far as, talked about XLK being a strong performer off the lows, very much was, because remember, tech stocks, they're inherently more volatile. They're higher beta companies because of their earnings. They have higher growth rates, but yet they're very cyclical. And when that growth rate, when the cycle changes and things start going the other way, they tend to fall more. So you can see a nice strong 30% or so plus rally off the lows, but you can also see where it stopped cold on Friday. I'm going to zoom in real quick, but I'm going to show you right here. These are Fibonacci retracement levels. This is the fib line from the very highs down to the recent lows to the button. We zoom in nice and tight. That's the 61.8 Fibonacci retracement, which I said is a key fib level, and that's where we stopped so far. And then bigger picture, you can see this wedge type pattern right here on the daily chart. You can see the PPO, one of my favorite trend indicators, one of many. It's not a be all end all, but it does a good job. When the white line, signal lines above the zero line, bullish trend. You had a little, not even a whipsaw, because that was a correction right there, so caught that correction. And then throughout this whole period, it said tech is in a bull trend, and it was from there to there. I'm making a big mess of this chart, but here you can see right here, we lift it all up, get rid of all the drawings and annotations. We can do it very clear that way and just show you that for the most part, it's been bullish. Told you here to here, we were and still are, again, according to this one trend indicator. That can change, but right now we're still below that zero line. And the other thing about the zero line, it acts as support or resistance when tested from above or below quite often. You go back in time, especially during sharp moving markets. You get these choppy sideways markets, you get some more whipsaws, but overall, on balance, you can see it does a pretty good job of saying, hey, trend's bullish or bearish. So that's one thing I'm looking at. Now let's look at IBM, because we have the big fangs. Yeah, let's go there real quick. I don't know if they've reported yet. Let me put them. No, we'd probably see some movement here on the 1 minute chart. Oh yeah, they must have. There's that after hours buzzing you see. Assume they came out. I haven't started this video right after the market closed, but let me give you my thoughts on it. All right, here's the chart. IBM daily chart. You want to know what I think is going to happen? I'll just say it without mixing words, and we'll see what really ends up happening. I think we're near the tail end of the run, like so many stocks in the market. I have pretty big resistance right here at 126.80. We almost hit it the other day, fell a little shy. And just above that, I have another decent resistance level, about 130.71. You can see all the levels right there, why it's marked there. Big old gap right here, reaction high from there, low end. So this is what we call support zone, another reaction from above, and we danced around it. So this whole thing from 130.71 down to 126.80 is a resistance zone, was a former support zone. And once they broke that support zone, you can see they danced on it for about a week right here during the first leg down. And once it gave up the ghost, once that support gave way, that was it. Gap down, floundered around for a few days. It was a big drop, digesting the short-term oversold conditions, and then boom, the bottom fell out. And now we've rallied back to it. So it's simple TA 101. This is an objective shorting level. It's where I think this rally will likely stop. I could probably put up fibs. It's going to tell me what most everything else is saying, that as of now, from don't get wrapped up in the percentage gains again, because it's all relative to the scope of the move. So whatever IBM rallied off the lows, insignificant. It retraced 50% or only half of the drop, and that is nothing more at this point than a kickback rally. When I say at this point, yeah, hey, every road to new highs, every start of a leg to new highs starts out and hits the 38.2, hits the 50, hits the 61.8% fib, and eventually retraces all the previous move and then keeps going. So I don't think that's going to happen here, but I certainly don't. I told you why, and there it is. We're right at a key fib resistance, 50% retracement and resistance, like everything else. Key moving averages above overhead. So what I think is going to happen, I'll draw it out. I think you could probably already see my lines. IBM's a simple, it trades like every stock, well to the techno. I'll roll back as far as I can go on this chart. I missed one here, I must have had it. And what you're seeing is wash, rinse, repeat stuff. Like I said, these divergences are not the be-all, end-all, but yet negative divergence right there. You can see the lines down below if I draw the correction. Small, actually, right here at the top was your divergence. There's a small divergence right there in a correction. Need a line tool correction. Positive divergence right there led to a rally. That rally ended with negative divergence, which led to this drop, which throughout the drop, even though the drop from this divergent high right here took us all the way down here, there was a divergent low in between on the daily time frame. I must have highlighted that back at the time, and I was showing, I guess, I have all these arrows. I haven't touched these arrows. Did that back in 2018. Haven't moved it since. So I was highlighting, look, we have boom, 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 boom. The PPO, like I just talked about, was back testing, boom, 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 bouncing against the zero line, saying you were in a bearish trend. But then when it broke out, I must have highlighted at the time, we had positive divergence, plus the PPO crossed the signal line, said, hey, the trend flipped to bullish. So that was good for about a 11% rally, but it was all part of a longer, leg down off that last divergent high, and then boom, big sharp positive divergence low. I highlighted divergence across the board on just about every sector. The NASDAQ 100, a lot of key sectors back in 2018 at the lows. The fall of 28 or winter, right into the Christmas lows, and then boom, and that's it. So wash, rinse, repeat. Wash, rinse, repeat. Divergent high, correction. This was just a trend line break here, but this is the big one. Here's where we're at. We had big divergence right here. Actually, from all this time here, negative divergence, and that was a catalyst for that big drop. It was, let me be correct, specific. It was the technical catalyst for the drop. The fundamental catalyst, of course, was COVID. The fundamentals and technicals do often and almost always at some point align. There are disconnects for a while, but that's where they both played out. So that's what happened there. Now, where do we go from here? So I gave you my bounce target zone, which was almost hit really the other day. We came close enough, but that does give, if we get to the top of it, maybe, if IBM comes out and says something nice on their conference call tonight that people want to hear, I see about 10% upside max. And I think anything up to that 126.80 level is an objective short. And then what I think happens And again, I'm talking about IBM. This is not an official trade idea. I don't have a position in IBM, nor would I take one right for the earnings, but I think this is what we look at here. And it's not going to go straight down. We'll zigzag down. We'll get there, is what I think. We'll have a rejection here, keeping the bearish trend, rejection of the PPO line. Come on down, probably undercut, just like the markets test. Some stocks will undercut, some will probably reverse shy of those recent lows back from March there, and then put in. You could see we have the stage for a nice divergent low, and then time to get long IBM and tech stocks in general, if that's the case. Let's see what's happened since. All right, so far not so good for IBM. But oh, let me say this too. If you're new to trading and investing, you've heard me say this, or if you're new to the site, you haven't heard me say this. If you are been with right side of the chart for a while, you've heard me say, don't put too much stock into what happens after hours when a company reports earnings. There's really three components to an earnings report. Normally, now some companies aren't giving guidance, but number one is the initial release, and you can't trade fast enough. The algos come out, those are algorithmic trading programs, and they fire off buy or sell orders based on what's going on there. So that's part one. And then usually later, if it's after hours earnings like this, the second part is a conference call. I don't know what IBM's doing. I know a lot of companies have refrained from giving any guidance, which to me is a big red flag for these fund managers. I think I don't know, fund managers that are buying tech stocks up to this level with companies not giving forward guidance. Well, good luck to you. You're going to lose your job if they take a big leg down, and rightfully so, as they should. I don't think anybody should be bidding up the market when companies aren't giving guidance. I'm talking those that use fundamental analysis. All right, so that's part two. And what I'm getting at here is I've seen a company blow earnings away. Stock rallies, they beat expectations, everything's great, but then they come on the conference call and they start saying, yeah, but we're seeing a slowdown here and we're seeing a slowdown there, or this and that, and the guidance isn't so hot, and then the stock goes down. Sometimes I've seen them come in and give rosy guidance and rosy forecasts. Beat earnings handsomely and then give rosy guidance. I've seen the stock go down, and I've seen it go the other way as well. Usually it goes the other way after a stock has been in a downtrend for a while, in a bear market or a correction mode for a while, and at that point all the bad news is priced in. So the stock comes out with abysmal earnings, horrible guidance, or poor guidance, but yet the stock turns around and rallies from there. That's a stock that's sold out and washed out. We can look at the chart of IBM and say that's not the case right now. Then the third and final component to an earnings report comes tomorrow at 9:30 a.m. when what I like to say, all the players step onto the field. Can institutions trade in the after hours? Sure. Is it the most conducive venue for them trading? No. It doesn't have the liquidity. You can't trade market orders. Everything limit orders only. It makes it harder for the algos, and you don't have a lot of people on both sides of the trade. So that's why you see these wild swings. And so when the market opens tomorrow, you'll see a lot more volume, and then you'll also have all the institutional investors, fund managers will have enough time to absorb, parse through all the data and absorb it, and then decide, do they want to add to or close out their IBM position. And of course, this all loops back into what I was saying. This is XLK. This is a 1-minute chart. So what you're looking at here, this was Friday's close up here. Here's what we did. We gapped down today. We rallied, tried to backfill the gap, fell shy, drifted down into the close, and we're a little bit lower today. Again, nothing much. We're down now. Don't put much of a weighting on that unless it can take the NQs down solidly below that support level I just covered earlier in the video. But right now this is just kind of the market hanging on, probably waiting to see what happens. I assume they're doing a conference call, and then of course you have let's look at one. Okay, this is Intel, and again, this is by far the largest semiconductor without even a close second. It is a $264 billion company by market cap. The next largest semi Unless I'm mistaken here, I'm looking at the holdings of actually a whole list of semiconductors, and Taiwan Semi is down there at 186 billion. Then it goes down from there. Nvidia, who we have a short on now. So again, this is kind of the leader, and so they have the potential to set the tone for not just the semis, but the tech sector as a whole, because the semiconductor sector is pretty much the canary in the coal mine for the tech sector as a whole. So if semis are starting to move down, tech will usually ultimately follow the semis down. So a lot of eyes will be on Intel. Forgive me, this is a busy chart. I have not cleaned this chart up in a long time. But I just want to show you there is a trend line that is walking up right here. Like so many other things, walking up a trend line. Had a heck of a recovery. A lot of people piling back into Intel again. Not too far off its all-time highs right there right now, through today's close. Even through Friday's highs, it came within 10% after falling 37%. So it's recouped a good part of the losses. And let me see if I have another board of anything interesting. Yeah, here's an example. This must be an old board. I haven't touched this in a long time. This goes back to 2019. But looking at my notes here, there was since peak right here, Thursday's after-hour session high after Intel reported earnings was 57.77. So there was a case where it popped. It was at the time that would have been a multi-year high. It was, and all-time highs, all-time high, and it popped. And I've seen this many times. It was up big after hours, but yet when it opened the next day, it only hit a high of 55.79, 3.4% lower shortly after the open on Friday, and then to the following morning, and it continued to fall right there. And then I guess that's it. I already put that down there. But what stands out is Intel on the weekly chart. Way back then, that was at the same time I started becoming bearish. Added Intel, I believe, as a short, whether it was official or unofficial, I can't recall. And I had a long-term target based on this weekly chart. And it was right here. We had a beautiful bearish rising wedge on the weekly. I was calling for a 24% drop. It was right here when I first posted that. We got it almost to the button. We hit my target there. It actually ended up, we went 2% higher from where I posted it. And again, it was a setup. I said it would trigger a sell signal if and when the wedge broke. So the wedge went on to break right after that. It fell 26%. To hit that target right there, first target I had, and I had a second target here calling for a 32% drop, which I still think gets hit. I pointed it out here. We went back, retested that high, put in an extension of the divergent high, fell again, this time a little more than 26%. And then we pushed back up. We recently had a breakout. We had a potential triple top there. We broke out. And this is what I talk about all the time. I love this stuff in technical analysis. I mean, you guys probably figured out you get me talking about charts. I don't want to shut up. This is TA 101. Look at that giant, massive green candle. You don't see a candle that size in Intel green candle, even bigger than all these back here. Why? Because this is technical analysis. This is a beautiful example. This is a multi-year high that Intel had failed at since mid-2018. When it finally took it out, it didn't just kind of meander on through there. You had a massive surge of buying. That's shorts getting squeezed out, betting on a triple top failure. It is longs buying a breakout to new all-time highs, because from a technical analysis perspective, nothing is more bullish than on face value than a stock breaking out to all-time highs. Why? Because anybody that owns a stock that day is positive. Nobody is underwater. You don't have anybody waiting just impatiently or patiently to get out on the next bounce. Everybody's profitable. So on face value, breakouts to all-time highs are bullish. However, when they fail, that's very bearish, because you have all those buyers that jumped in thinking, oh, that's a bullish breakout to new highs, as well as the shorts that got squeezed out. And then so what happened there is those longs that that bought simply on the breakout to new highs and weren't paying attention, highlighted at the time, another very clear uptrend line. See these little uptrend lines? They all have the same slope. This isn't coincidence. You boom, sell signal, get out, sell signal, get out or get short, sell signal, and then this big one, sell signal. So that sell signal triggered, you got it, impulsive move down, breakout failed. And so here we are. Where I'm going with this, we've come full circle back to that old level that was and still is, I believe, significant resistance around 58, 59, 60, and that's where Intel's at right now. And the only thing that's changed since that first divergent high I pointed out back in early 2018, followed by the 26% drop and another failure there, the only thing that's changed is the divergences have grown even larger. Those same divergences that were in place back then at the time, they certainly played out for that 26% drop, but then they grew larger. And the second time we had the same divergences larger, we had a bigger drop from high to low. That would be about, it was about 27, 20, a little higher. And then that third divergent high so far played out for even a bigger drop, about 37%. Now, I have to say, the $1,000,000 question, is it over? Is a 37% drop enough to satisfy, quote unquote, the divergences possible? However, you still had those divergences in place, and from the look of this, I could easily see a much larger drop. So I can tell you this, Intel's going to come up on Thursday night. They are going to most likely set the tone at least for that evening and possibly the next day for the market because of their weighting in the tech sector and especially being the largest semi. Bulls want to see this and eventually come on. I will give them credit. The PPO is starting to curl back up here at the 0 line. Bears want to see a reversal of failure here this week. And being with earnings coming up, Intel's probably going to be a dead money trade unless some other catalyst makes the market go up or down before then. We'll probably flounder around waiting to see what they report. Should we get back down another run at those lows, this is a very, very big level here. Still is. It was a big level. It was my target back here from early 2018 that was hit once, twice, 3 times, almost 4 times there. Another run at it. The more you tap on a support level, the more likely it is to break. So if we get down there again and we break it, I have Intel. You can see the next 2 targets, and ultimately I have it coming down all the way here at about 31, 34. That'd be pretty darn ugly for the tech sector. That would mean a drop overall from the highs of about 54%. Long way to go before that even happens, if it does. So let's see what happens on Thursday. And more importantly, Friday, once Intel starts trading. And then back to the theme I started on earlier, XLK being the biggest tech, being the biggest component of the market. So we're going to watch all these closely. We're going to watch stocks. We're going to watch NVIDIA. I've already posted that as an active trade today. There's no reason to repeat what I said in that post. And again, I showed you the examples back here. It's just a plain simple mean reversion trade. Nothing goes up forever. I know when you come off the longest, strongest bull market in history, everybody thinks stocks will go up forever and there'll never be another big bear market. But this is just how things work over time. When you look at these long-term charts, this is a trend line that periodically you come back or this stock has, and revisit. And what happens, the farther away you get from there, the bigger the mean reversion. Although this one, I told you, I measured it out. And if we hit it about when I think we do, about a year, this one I think was, what did I tell you guys, 9 months, if I'm not mistaken. That was 12 months. This was the dot-com bubble. Things fell a little faster, give or take a year. That would be that drop of about 80, what did I say, 85%, whatever it was down there. Yeah, about 85%. There it is. And again, it's, I don't see anything different in the technical posture now. And here's one that didn't play out. There you had that big divergent high, and yeah, we had a correction so far, and it was pretty powerful, about 40%. But based on the scope of this divergence, this is larger than these 2 divergences back here that led to those 90 and 85%, drops back to the trend line then. So I have to say that because I know people roll their eyes and think I'm smoking something if I'm calling for an 85% drop in a beloved stock like NVIDIA. I mentioned to somebody that questioned that, Boeing too, you recall back here just before the highs. And like I said, I said in a reply to somebody today, I can't recall in recent years a stock that had more analysts bullish on it, bulletproof, impervious stock. They build the plane. They're the best plane builder in the world, better than Airbus. Boeing contracts galore. The world's only getting bigger. People are flying there. And that's when I posted that setup first in the trading room, followed up, big divergent high. And I said, this one's poised for a major trend change, a major bear market, and that was right off the highs there. And this is just an example of what can happen to a great company when things change. And you're going to say, well, yeah, well, Boeing had a few planes fall out of the sky since then. Sure, but it was priced into the charts. I didn't pick on Apple at that point calling for a major top. This is one that was priced in the charts. It's a beautiful little, display of technical analysis, and I think you're going to see the same thing in some stocks in the coming years because we have similar patterns. That's a megaphone pattern, aka broadening wedge pattern, right at the top of it. Was an excellent short, and then you had a bull market uptrend line that was taken out since. And I posted updates along the way on this one. We had a level here, 322.42, that Boeing was fighting to hold for a long time after it, broke down below the trend line. And then finally, when it gave up that trend line, did it just kind of meander all down through there and go back up and down? No, it was a waterfall sell-off because the better defined a support level. In other words, we traded on this thing for years since 2017. The better defined with more reactions, and the bigger the divergences, everything else, usually the bigger the drop. So again, you might be sitting here saying technicals had nothing to do with it. It was all fundamentals. I say that was just the catalyst. It was priced into this for whatever reason, and we'll leave it there. And we just agree to disagree if you think that the technicals didn't have anything to do with this. Or in the case of NVIDIA, as I said, if you don't think the stock's going down to any of these levels, the weekly chart I gave you, these are long-term targets. The official trade right now, by the way, we based on this 60-minute chart. So I'm only showing right now we have these near-term targets. And again, to be very clear, because I get this a lot, this is not an active trade. It is an official trade setup. That is a trade setup pending an objective entry, which in this case I set it a few points below, a couple points below that 284.80 level. I'll go from memory, I think it's 282.70. It will trigger a short entry. Why? Because I wanted to give a little bit of a margin of error so we don't get a whipsaw signal. It doesn't guarantee it. But as I said in a reply under that post today to somebody, ideally you want to see an impulsive move down. That'll help increase the odds that the breakdown sticks. So imagine that green candle being a big red candle, whether it happens tomorrow or next week. And if it doesn't happen at all, then what happens is this trade gets moved away. It's not a closed out or a completed trade because it's an unofficial trade. It's a trade that never triggered an entry. So it was only a potential trade idea. And so we'll see. And there might be others out there I may add back, maybe some of those semiconductor ETFs. But right now, we're still at a point where I have to, acknowledge the market could power on through these divergences and go up and even make a new high. Right now, there's just a lot of giddiness in there, and I think a lot of individuals and institutional investors putting what I believe to be more stock into what the Fed has done. I understand the Fed has come in with guns blazing. They went all out nuclear on their interventions this time around, coming in a lot heavier than anything they did in 2008, especially early on. And so yeah, that certainly carried us up, but only again it carried us up to about where not far from where I had us going. Max bounce target back here when I was starting to say stop shorting. The objective for shorting is no longer objective to short for new shorts or existing shorts, and so we're still only slightly past that. So again, it's more of the news following this. All this divergence, everything here was pricing in what the Fed did afterwards. If you want to say that, there were also other reasons, for the catalyst for that, the excessive short interest and the fact stocks were really down, pricing in probably the worst of Corona up to that point. So that's that. And finally, I told you I'd talk on crude. Let's do that for you real quick. And so that's cocoa. Here's crude. All right, so here's an example. I left this up. I'm going to zoom in a little bit on this. No, yeah, I will zoom in a little bit. Okay, I updated crude, and I've quite a bit of updates, but when I have a high degree of confidence, I'll post it as an official trade. That means it'll hit the front page. I'll use an ETN like USO as one of the proxies because I know a lot of people don't trade futures. So last week, if I'm not mistaken, I posted out some potential divergences and a potential long setup if those divergences played out. And that would have been, if I recall correctly, over this 2685 level. It's resistance, pretty good resistance. So a couple things happened, a couple things didn't happen. Number one, we didn't get a breakout. So just like NVIDIA, no buy signal or sell signal, no trade, only potential setup. Here's Crude. And the other thing that happened is because we never broke out, stocks went down. Guess what? We never confirmed the divergence. I talk about that often. The difference of potential divergence and confirmed divergence. In other words, the PPO right here, if you look at down below, PPO line, that orange line was below the signal line. Had Crude broken out around that point last week and popped up through here, big green move, big green candle, it would have turned the PPO up. So you would have the PPO make a bullish crossover, which would effectively have put in a higher low above this low, and a higher low here on the RSI, with prices making a lower low. That's confirmed divergence. But what we didn't get that, so we never had the divergence confirmed. So there's an example of why positive divergence, especially potential unconfirmed divergence, is not a buy signal. It's something to be on the lookout for. So you need this and that to happen. You need the breakout, number one. That's the most important thing. And then if you have the breakout occur with positive divergence, just like we did on natural gas recently. I mentioned natural gas right here as a trade idea in the trading room recently. I pointed out, just like I did back here and just like I did back here, we had positive divergence. That was a catalyst for this explosive rally. This wasn't just, sure, there might have been a headline, it might have been something to do with the inventory report, but I've traded natural gas long enough to tell you I've seen bad inventory reports with strong technicals, bullish technicals in the charts, and those bad inventory reports, meaning excessive inventory in natural gas, it's followed by an explosive rally because it was priced into the charts. In other words, that bad inventory report was already priced in by the smart money and those in the know. So if you're trading natural gas or crude off news headlines, off the inventory reports, by the time you hear about them, the smart money has already probably had a good idea. Not to say I have seen some bad reports or surprises that come out and move it too. So don't get me wrong. I'm just saying that you're driving in the rearview mirror if you're trading off fundamentals and news on things like this. In my opinion, the only way to trade natural gas and crude oil, or the most effective way, especially active trading, is look at the charts. And so as pointed out back here, you had bullish divergence recently, led to this, so far, this move right there that accounts for a gain of about 27% in just a few days. That previous divergent low right there was also good for a move of 27%. So that's what I wanted to talk about with the divergences. And then finally, remember, the divergences weren't a buy signal. So you might say, well, Randy, you just sat there and told us the divergences aren't a buy signal. Yeah, but the buy signal is a breakout above resistance. So just like we had it back here, they had a trend line break and a trend line break right there. Then you have these little areas of consolidation and breakout. So for what it's worth, if you're wondering where it goes from here, I don't have a strong opinion. Did match that previous run of about 27%. I'm going to guess now this one's probably about 27%. I just moved one of my lines, but let me see if that's right there too. Yeah, 25%. So just looking at the history, recent history, that seems to be about the end of the run for these guys. And natural gas is so volatile that once you get the run, the reversal is usually just as swift. So the risk right now is skewed to, I think there's a higher risk of being long right now than being short. I don't see a sell signal on that gas. I want to say that, but based on the scope of the run, it's more than satisfied that small little divergent low. Although, yeah, that was it. Let me see if I'm looking at the chart real quick. Oh, okay, no, I thought I might have saw something else that I didn't. That's it. Let me move away from this one and get the video out to you guys. And then we'll watch and see how the market trades tomorrow after IBM tonight. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.